Now, the part of the show where we talk about three things that I believe individual investors need to be focused on, keep one eye on at least, or maybe both eyes on, both ears on, before you make your investment decisions. And here they are right in front of you, as always. First one, Trump tax bill. We know the tax bill that Republicans and the president are trying to get pushed through Congress. These are to extend the Trump tax cuts from the first term, plus few more tax cuts, like no tax on tips, for example, that the president campaigned on when he was running for or campaigning for his presidency. Also, trade negotiations. Trade negotiations, something that's going to be front and center probably for weeks to come. And anytime we hear about a deal being announced, or at least the workings of a deal, or maybe the framework of a deal, I think that is something individual investors need to focus on. Inflation and GDP updates. We're going to get GDP, the latest GDP update out of the US on Friday. PCE, personal consumption and expenditures, will be announced on Friday. So that is important. Everybody's waiting to see when the higher prices will start to bite. Canadian big bank and Nvidia earnings. And perhaps we should start with Nvidia earnings because Nvidia is going to report later today after 4 o'clock. Obviously a big report, one of the largest companies in the world. I think they're second largest now to Microsoft, largest chip maker, AI. It is extremely important, as goes Nvidia, probably goes the AI sector of technology, perhaps goes all of technology. And we know that Nvidia just in general makes up a large component of the S&P 500. Canadian big banks have started to report. We heard from Scotiabank, we've heard from TD Bank as in our examples, and TD Bank, very good results. Scotiabank, not so good, although Scotiabank did increase its dividend. So we're going to talk about some big bank earnings as well. So let's move to the first topic, tax trade bill and trade negotiations. So needless to say, this is extremely important. You know, the president campaigned on lowering taxes and obviously extending his taxes, lowering taxes even further, no tax on tips as an example, and trade negotiations, right? He promised to bring back manufacturing to the United States and allow other countries to open up more so that the United States can benefit from freer trade, let's call it. Maybe not free trade, but perhaps freer trade, or maybe more balanced trade, as the president would say. So those are two big points. And we know all about the trade situation, waiting for really maybe our second trade deal to be announced. Hopefully that'll come soon. And we also know about the tax bill. The tax bill right now is passed one side of Congress, now moving towards the Senate. And it's going to be tough to pass the Senate. I'm sure the bill will look slightly different by the time it gets through. But I do believe we're going to see a tax bill. And I do believe the first term Trump tax cuts will be extended. Plus, as I said, a few other tax cuts as well. Our first chart here is an interesting one. It shows who is benefiting or who will benefit from the recent bill. And it's I think it's been called one beautiful bill, right? Or one, I think that's the term for it. Who's going to benefit? I think it's actually big beautiful bill. I think that's what they're calling it. But who's going to benefit from that? And well, this chart tells us who is going to benefit. And you can see here that households earning less than $51,000 would see their income actually drop next year, while the top 0.1% of households get an average boost of about $390,000, according to Penn Warren budget model estimates. So you can see here the average change in income after taxes and certain government benefits in 2026 by income group, 0 to 17,000. You can see here 93,000 to 174,000. The benefit is small, but it is there. Lower than that lower income earners, it's less than that. If you look at when you start getting into 388,000 to 988,000, you can see maybe a 17.8 benefit, and then it's not really until that long line at the bottom is really who benefits most, and those are your highest income earners. So anyone making over In this case, according to this chart, over $4 million. So, you hear all the time, who are these tax cuts and who are they benefiting? Well, this is a chart to show you that, unfortunately, it is the wealthy, the ultra wealthy, that are benefiting most from these tax cuts. And as you move down the income ladder, if you will, you get less and less of a benefit for the lower income individuals. Our next chart here, we can pull that up. And again, this talks about the tariffs, how it's hitting hard. And, we want to get rid of tariffs. We want the trade negotiations to go through positively for the United States and for Canada and for all countries that I guess most countries around the world. That will only benefit not only our economy here in our country, but it'll also benefit, needless to say, the stock market. And I know the United States has said that bringing down the tariffs, perhaps even to 10%, that is a win for everybody. Right now, tariff rates are at the highest, one of the highest levels we've seen for quite some time. You look back, and this next chart shows it. If you look back during the Depression in the 30s, you're looking at 20% at that level. Right now, after the 90-day reprieve on China tariffs, as you can see on the far right, 22 points in 2 weeks, you can see that obviously coming down by quite a bit. But if the 90-day reprieve does not, succumb to a trade deal, you can see how high the tariffs will be. And tariffs, as the title says, tariffs hit staggering level relative to history. U.S. effective tariff rate in percentage. So there you have 20%, and it could be as much as 25%. Right now you have that reprieve. If in China, for example, if they can get fentanyl under control, perhaps they get rid of that 25% tariff on fentanyl, and they just have the 10% tariff. Again, if they can come to some trade deal or trade negotiation. So as investors, we need to keep an eye not only on the tax bill, if that's going to be passed. If it is, what does that mean? It could mean higher debt, which is not good for the bond market and the bond market, what they're signaling, but it could be a positive maybe for the stock market. So we'll have to see how that goes. And in the meantime, while the tax bill is being negotiated, a big, beautiful bill, as they call it, we're looking at hopefully to hear some announcements on some of those trade negotiations. Our second point from our top 3 things to consider before you make your investment decisions is to keep an eye, obviously, on the inflation, the economic data. Inflation data, GDP data, and that is being announced, has already been announced. We're going to get a second reading on US GDP. We're going to get a reading on monthly GDP out of Canada shortly. And these are very important numbers for us to parse through. We get to see, is the country going into a recession? Are things continuing to slow down? And what is inflation? Where does inflation stand? Do we have higher inflation, slower growth? Does that mean a stagflation type of scenario? Or are we seeing growth hanging in there and pricing still not going up as yet? Our first chart here is PCE, personal consumptions and expenditures. We're going to get that number, as I said, at the end of the week. Right now, the core number, excluding food and energy, 2.6%. The headline number down to 2.3%, the lowest we've seen it in quite some time. Keep in mind, the Federal Reserve has a target of 2%. That's where they want to get this down to. Our next chart shows Q1, US Q1 2025 GDP advance estimate, which is 0.3 negative percent. We saw that number come out recently, but you can see in Q4, 2.5%, and Qs, from Q2 and Q3 from last year, over 3% growth in GDP. So we already have our first negative number. If the number stays negative in the US, that will be the first quarter of negative growth. If we see the second quarter showing negative growth, then yes, a recession will, the US will be in a recession. And obviously, depending on how mild or significant the recession is, that will obviously affect the economy, jobs, spending, and you name it. Inflation probably will come down if people aren't spending as much. Next chart here, Canadian GDP. In Canada, this one is a monthly chart, and you can see for the month of March, 0.1%. For the month of February, basically zero. Prior to that, we had a big jump or a bigger jump, 0.4% in January. But you can clearly see how things are slowing down in Canada as well. And the question becomes, are we in a recession here in Canada? I know talking to some investors recently, they've heard from some individuals that they've seen in the media, BNN or on radio, and they've said they believe Canada is in a recession, and they believe that really for two reasons. One, they're seeing exports really slowing down in Canada. Obviously, exports to the United States is probably the main cause of that. And again, loss of jobs, not growing jobs as much as quickly. And again, you're probably thinking tariffs are probably a main reason for that as well. So tariffs are starting to bite more as we move forward. And if trade deals are not made soon between Canada and the US, a lot of economists think that, yes, our country can move into a recession. So keep an eye on the economic data coming out over the next few days and the coming weeks until our next show. Economic data is extremely important for what the Bank of Canada is going to do, for what the Federal Reserve in the US is going to do. Our third and final point with regards to what individual investors need to focus on before they make their next investment decisions. Bank earnings, Canadian bank earnings, and Nvidia earnings. Let's start with Nvidia because one of the largest companies, second largest company in the world today, they report earnings after the bell today. So we're going to get their earnings really soon. We're talking, in the next 4 hours, 3.5 hours. And Nvidia is so important to the stock market. We have a couple of charts here to show you how dominating Nvidia has been as a stock as compared to, well, our first chart shows it as compared to other stock. Vistra, as compared to Meta, as compared to Coinbase, etc. There it is. And you can see Nvidia at the top. It has definitely done the best out of all those stocks. Other tech stocks there, Coinbase, obviously crypto affects it. Vistra is energy. Supermicro computer. Obviously, they're in the AI world as well. Our next chart on Nvidia, we have another one, and it's titled Nvidia Runs Away from the Competition. Look how well Nvidia has done. And this is going back to, going back to 2000, before 2023. So in the last couple of years, look how well and how much it's outperformed its peers. You can see at the bottom there, I don't know if any of you noticed it, AMD and Intel. Those are, I guess, Intel used to be the most dominating chip maker in the world. AMD now is actually surpassed Intel and now is in second behind a dominating Nvidia stock, Nvidia company. Our next chart, another chart on Nvidia. And if this doesn't show you how well Nvidia has done versus everybody else in its competition, I don't know what does. And you can see here the data center business. Data center business dominates Nvidia. Data center business dominates AMD as well. And as you can see here, Alphabet, which does a lot of things, also is in this space, Google Cloud as an example. But look at how Nvidia has done. Data center or corresponding business segment revenue quarterly. Look how high Nvidia has gone based on itself and based on its competitors. It's just an unbelievable run that Nvidia has had. Pull back recently based on this DeepSeek. We talked about it on a show a few shows ago. A low cost, DeepSeek doing what AI or Nvidia chips, high-end Nvidia chips could do at a lesser cost. And we found out quickly that that's may not necessarily be the case. The big tech companies continue to spend on AI chips, and Nvidia is definitely a benefactor for that or of that. We have an Nvidia chart. This is a year-to-date chart. There it is. You can see that Nvidia, yes, had been coming down from about, let's say, mid-Feb to, let's say, in and around middle of April, and then really jumped up, came back down, and then really has never looked back. Month of May has been a fantastic month for Nvidia stock. So something to keep an eye on. Obviously, we're going to hear the results tonight, just after 4 p.m. Let's see what happens. A lot of people thinking that its China business might bring down the numbers a little bit, but perhaps business with the rest of the world will offset the China business that has been lost due to the United States not allowing Nvidia to sell their chips to China. I also mentioned Canadian bank earnings. We're going to continue to see Canadian bank earnings. Royal Bank, CIBC reporting tomorrow. I think Royal Bank is going to show fantastic numbers just based on what TD Bank has told us in the last, well, they actually reported earnings last week. I think TD Bank's earnings is a good inside view as to how Royal Bank is doing. TD Bank, really fantastic numbers right across the board, from net interest margin to just growth. Their business in the US getting better. If you recall, they had the issues with money laundering. That is not as much, well, I shouldn't say not as much of a problem, but they're working on addressing that, and that is going well. Our first chart is one on TD Bank. You can see how well the stock has done for the month of May, and recently has moved higher than $90 a share once again. That is a mark that we have not seen in quite some time. When the issues, money laundering issues came out, TD Bank was trading under $80. So anyone who had the iron stomach to buy shares, they did quite well. Our next chart here, Royal Bank. Again, another stock that has had a great run in the month of May. They're going to report, as I said, tomorrow. And our third bank chart here is Bank of Nova Scotia. And their earnings came out on yesterday. Not as good. The good news about them is that they increased their dividend. So now their dividend is over 6% once again. Increased share buybacks. They're buying back their own stock, which again is good for the stock. And that allowed the stock to move up initially yesterday with the news of their earnings that came out just yesterday. So overall, big banks, decent start to the quarter, decent start to the earnings season. I think, as I said, Royal Bank, CIBC, I'm looking forward to some good things there in tomorrow. And yeah, I think overall, investors need to keep an eye on these big bank stocks, because living in Canada, it makes up a very large component of the Toronto Stock Exchange. And if you are a Canadian investor, you probably own a lot of these Canadian banks. So very important to portfolios. Nvidia, very important to portfolios as well. Those things, coupled with obviously announcements out of Washington, the economic data that is coming out in the coming days, all very important for individuals to be focused on before you make your investment decisions.